Then we can go over like the seasonals, right? Just
Yeah. I got some stuff already lined up for you. I know you said you had a bunch of questions, so
well, I kind of narrowed it down, but first I wanted to send you, I want to send you my condolences on your dad passing. I know that he was a big inspiration for you and a lot of other people, and I'm sure he'll be sorely missed. But great guy, and I'm sure you're going to do. I hope everybody's doing well.
yeah, we're doing good. It was a rough couple of weeks, just
Yeah, yeah.
coming to grips with him being gone, but yeah, I'm
Okay,
continuing to stand at his shoulders.
I know you are. I know you are. And you're going to do a great job. Oh, you do a great job. So,
Thank you.
anyways, look, Jeff, I wanted to ask you. When was the last time that you saw this kind of volatility um, going into the end of November and into the beginning of December? And are there other times when you've seen it like that, as volatile as it's been?
It's it when you get this kind of volatility around this time of year, it's you're looking at a turning point. Um, I remember 2018 was pretty volatile around this time when we had, the rate, increases coming in. That was the last time. It wasn't all that long ago, but
Yeah.
um, it's not so unnatural right around the beginning of the month. I mean, I'll show you the. Let me go back to we got our little chart of the typical December. I mean,
Yeah.
there's some volatility here in the beginning of December. Uh, this is an average of the last 21 years, as you can see, 21 to um, 20 to 2000 to 2020. Sorry, so it's smoothed out, but it's the tax loss selling with a gain like we had this year. You're going to see some profit taking. I mean, this is the ends of quarters, the ends of years, the ends of months, the beginning and ends and middles of things. People do things. We all behave
Yeah.
repeatedly. I mean, we take our morning walks, we go to the gym after work, whatever your schedule is. It reflects the market activity. Also reflects our repetitive behavior in the market. So, the beginning of December here, there's some jockeying for position. There's portfolio restructuring. There's profit taking when you got a big up year. There's tax loss selling. This is the institutions are gearing up for their year-end statements, and stuff moves around. We've also got a little geopolitical action going on with China and Russia, and some things in the Middle East as well. You've got the Fed uh, tapering. That's expected. This Omicron scare, but all these things, as I wrote yesterday on the post, which I had up a moment ago. Um, we have you had Omicron, you had the Fed, elevated valuations, but bottom line, the market's overbought heading into year end, heading into the beginning of December, and you got some technical action that ends up combined. We look at technicals, fundamentals, monetary policy, and seasonalities, and it kind of all sort of perfect stormed here at the around Thanksgiving and the beginning of December here.
Yeah.
Uh, so it's not so unusual and not so surprising to me.
Okay. And when I guess my other question was, what's the effects of a big volatile beginning of December for later in the month? Or
I
does
think
it
it
change?
sets up. I think it sets up pretty well for the usual month end. Small cap effect. That I was going to show you the January effect starts out. Earlier, as a lot of you guys know. I know you do.
Yep.
Somebody.
Well, you know what? Rather than me hang in here like this, if you just kind of want to do your slides and talk, and then if other people want to type in some questions, and then
So
the other thing is I posted something on Twitter. I mean, maybe you could put up a link to somebody could put up a link to the Almanac, so um, people could get it also in the room too. But
yeah. So somebody's not hearing us. I'm not sure if it's our volume or their volume.
okay, hold on 1 minute.
I just see it in the. I don't know. They said they can't hear. I'm just looking over at the chat.
Okay, hold on. Hey, Marlon, can you hear can you help TPS? Oh, yeah, I hear him pretty good too.
You want a purchase link, you're saying?
Yeah, if you put a purchase link in there. But anyways, um, I mean, I can ask questions, but I mean, I think maybe it'd just be easier for you to do kind of your glaze over what you're thinking. And then, I know that there's a couple of different events that go into the end of the year, right?
There's a
The
bunch of events.
Yeah. So I mean,
So
I really, if we could go over those, that'd be great.
I'm gonna do that, but just want to tell everyone, I don't sell the almanac individually online. If you want to buy it from me, give us a call, send us an email. Otherwise, just go to Amazon for a single copy. If you want to get the newsletter subscription with all the stock and ETF, picks and ideas, which I'll show you our portfolios there and my analysis every week and throughout the month, you get the newsletter and the almanac comes with it for free, and you can read all about that on the website. And if you go to this, here's a good link for you. This is the promo vibe. I'll give you this one.
Okay.
Just so you know, I mean, we're not we're not really going after individual almanac sales ourselves so much.
Right. 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 Okay.
Um, but we're happy to facilitate that.
Right.
So, all right.
Okay. So I'm going to jump off, and if you just, I mean, I'll be in here, and anybody in the room, and before I jump off, I want to reiterate how I met Jeff, and this was years ago, when I was on the floor, and when I started doing Marty's business, and Marty really believes in long term. The Pitbull believes in long and short term statistics, um, seasonals. I mean, are they? They're both right, seasonals and statistics. And
Hmm.
they've always played into some of the things he does. And as everybody knows, we get the Ned Davis statistics and you know kind of keep up with the expirations. But obviously, Jeff's what Jeff does is much more in depth than just some statistics for the expiration. But anyways, listen, I'm going to jump off. But anybody in the room as we go, um, you know, like I said, Marty got me into this, and became friends with Jeff, and we really are friends. I mean, we hang out when he's in Florida. Whenever when we can hang out, we do. But the thing is that if you've never taken it before, I really would suggest that you just try it. I mean, you can't kill yourself. But BD's asking a question. Oh, you got the prescription, BD. Okay, cool. But anyways, listen, I'm going to jump off, and Jeff, you do your thing, and if there's guys in the room that want to ask questions, let's just kind of go back and forth and make sure we're um, we're paying attention to the questions.
Yeah. And
Okay.
thank you. Yeah, I'll never forget the Christmas party. What was that? 2012.
Yeah, that was the craziest, wasn't it?
That was a great trip. That
Yeah.
was a fun little winter
Was that in the
wonderland.
loft? Was that
What's
in the
that?
loft? Was that
I
in
was
the
on the
loft?
it was on the second floor or something. I don't know. It was
Of that.
really it was like a frat house up there.
Well, that was my friend's loft. His dad owns a bond fund in Chicago. He's a trust fund kid, and that was where he lived.
No, you guys had the office. You guys we were in your office.
Oh! You mean the beat up old office across the street from the Board of Trade? Yeah, yeah,
Yeah,
yeah.
yeah, yeah. After I almost got filled with a an S&P futures contract pointing to the board when you were showing me how everything worked.
Oh, I
Like,
remember
what
that.
does that mean, Danny? With my finger up the air, somebody's like, Jeff, put your hand down. You're gonna get filled.
I remember that. All right, Jeff,
Anyway,
I'll let you take over. And again, thanks for coming in, and we'll chat later in the week or something.
most definitely. All right, guys. If there's something that you want to ask about that I'm not touching on, like triple witching, I can scroll back. I'm gonna roll through some of the almanac pages and just a quick check. You guys can all hear me okay, right? There's a problem. Okay, great. So here's just a page out of the 22 Stock Traders Almanac. This is the December Almanac, and it just gives you the bars here are based upon the probability calendar over the last 21 years of the S&P. Uh, the line in the middle is 50% up or down. So these are the days that are up more. You can see this is like the day after Christmas right here, and then we provide the sort of rundown of what to look for in September. You've got the free lunch, which is picking stocks making new 52-week lows. Right on triple witching, as on the close of triple witching, you can buy them the next day. This is better when you have a sell off here. So it depends. About last year was horrible. There was only a few that came through our screens, and it was not great. I'll show you that in a bit. And small caps start to outperform large caps. In the middle of the month, we got the Santa Claus rally, which we'll get into in a second, and and the fourth quarter expiration week is the most bullish triple witching week, as well as the week after. And I'll have to jump back a page once we get there. And this has got the midterm year here because this is next year's. And in the post-election year, which I got over here on the desk, which you all should have, you can hear me flipping pages. It says post-election years December rankings, number 5 Dow, number 7 S&P, and number 7 NASDAQ. So a little bit weaker in a post-election year, which is what we're in right now. But I think the recent sell-off is important. That looks like there's an island reversal there, which we'll get into some of that in a second. But let's look at some of the other seasonals. So just sort of scrolling through the almanac, you can see we've got this is November, December. You can see we got the different trading days, first trading day December. But I want to get into this January effect. Let's see if you guys can see that on the other side. That's good. So January effect, not to be confused with the January barometer, which is something Yale invented, that as January goes for the S&P, so goes the year. The January effect is the tendency for small cap stocks to outperform large cap stocks in January. And what what we've seen over the years is that this effect has really begun in the last 2 weeks, last half of December, which is what's setting up right here. Got the Russell 2000 versus the Russell 1000. You can see this top line here, if you can see my little mouse there, from December 15th to the 31st. You got a 2.9% gain for the Russell 2000 versus 1.6. So there's a bit of a trade there versus the going all the way to the end of February, where the used to be that trade worked a bit longer. So it starts earlier now. So you're going to be looking for that. This is the longer history. Okay, this is from year end versus from the mid month. So you can see stronger returns in the last 2 weeks, the last half of December versus from the month, end December through January. So January effect starts early. Here's a little graphic on the following page. You can see this. This is got some edits on here. This is we don't have a final PDF from Wiley yet, but that's another issue. So you can see this comparison of the Russell 2000 over the Russell 1000. That through most of the year, and everyone talks about how the small caps are underperforming, and but it really doesn't matter until you get into late October and November. You can see almost like a triple bottom here in the ratio comparison of the Russell 1000 to 2000. And then you see this takeoff here from the last half of December into the first half of January is when the small caps can outperform. So there's that trade that we look for there. That's just the history. And here you can see the reminders in the Almanac page of triple witching week, triple witching day. We got a little happy bull and the 3 witches. I know you guys like to say quad witch, but anybody trade single stock futures out there? We've done this before. And here's the free lunch. I'm going to jump over to the website and give you a look at some of the stocks that we pull up on this from last year. And you can see how not so great. See, here's what we send out. Just 3 new lows last year. Horrible selection. We picked these stocks from the list of stocks making new 52-week lows on triple witching day. We screen them over the weekend. We get rid of anything that's not a regular common stock, no preferreds, funds, splits, special dividends, new issues, or anything like that. Just straight up regular common stocks that have been trading for at least a year that made a new low, a new 52-week low on that day. So let me show you the previous year if I can, because that would be a much more attractive, like the one that was from 2018. If I just scroll through this a little bit, you'll get a good look at a proper list. Here you go. Here's a nice list of stocks. So we're going to pick these things, and it's just a nice trade. You guys can run some options on it or otherwise, but that's the free lunch stocks. Has worked well. I'm going to show you that page in the Almanac so you can see the general return. So the 2018, we had 23 stocks up 24, almost 25%, versus the composite beat it out by almost 10%. The 2019 did not do very well because the market had rallied quite a bit. There wasn't much of a sell-off. Last year was one of the worst in a long time. But overall, we see that the stocks making new 52-week lows right around triple witching, tend to outperform the market. And this is something that you trade quickly. And, if you get some good gains, take them. We don't like to chase these stocks. If they go down, we don't run after them. They got to stay right around that 52-week low in order for us to get into them. So then we're going to look at the old Santa Claus rally, a great line from Yale Hirsch. If Santa Claus should fail to call, bears may come to Broaden Wall. The point here is not that there's this great rally. It's the fact that it's generally a time when people aren't trading. The pros are in there picking up stocks that are oversold for tax loss selling. And if you usually get this average gain of about 1.3%, and people confuse it. They think the Santa Claus rally is anything that starts after Halloween or Thanksgiving or whatever, but it's the last 5 trading days of the year and the first 2 trading days of the new year. And this 7-day period is our first indicator of the year. And if it's not up, if it's not positive, like it was, and I have an Excel file ready to go for you guys here. Where's my Santa Claus rally? The last bunch of times that it was negative, in 15 and 16, in 08, in 05, 2000, 94, you had a couple of flat years. In 94 and 05 and 2015, we had a nasty bear in the year 2000, a nasty bear in 2008, and a mini bear, which is one of those Ned Davis research defined bear markets. Can you guys see that? I need to make that a little bigger for you. It's all right. So you get the point. Now, the next, I'm going to jump back to the Almanac. The next indicator, I'm going to go to page 14, I think it should be. No, it's 16 this year. The first 5 days early warning system. And this is what, standing on Yale's shoulders, as we mentioned before. We take the Santa Claus rally, the first 5 days early warning system, and his January barometer, and we call it the January indicator trifecta. The years, here's the January barometer, not so great the last, 20 years or so, had a bunch of errors, but combining all 3 of them, when you have the last 31 times, all 3 were positive. Santa Claus rally, first 5 days, and January barometer, you had the market up like 28, like 90% of the time for an average gain of 17.5%. As you get that, I'll show you the we just did this in our, here, I discussed it here at length. When all 3 are up, S&P's up 90% of the time, 28 to 31 years, average gain 17.5. When any of them down, the results are reduced. When all 3 are down, the S&P was down in 3 of 8 years with an average loss of minus 3.6%. Bear markets in 69, 2000, and 08. Flat years in 56, 78, and 05. in '05. Down trifectas were followed by gains in only '82, which was that huge secular, bear market launching pad, and 2016, which I think on some of my super boom charts, that 2016, I don't know if you guys remember that super boom forecast. Um, this may be like the 1982 moment, 2016, that little itty bitty bear that we had defined through using the Ned Davis research rules. Um, so that's the basic year-end seasonalities and the indicators getting into the beginning of the year. Next year, I'm going to show you some stuff from the 2022 Almanac. Let's see. I think it's on page 9. Is that the chart? Here's the outlook. So I just want to show you this chart. So this is midterm election year pattern. This is what has us concerned cyclically, 4-year cycle wise and seasonally for can you guys see that? Make it a little bigger. For next year. You've got a second year new Democratic president. This blue dotted line, I don't know if you can see that. That's this one. You got the blue line is first term, midterm years, any new president's second year in office. The blue dotted line is any new Democrat second year in office, the midterm year. And then you got all midterm years in the black line, and the dotted is Democratic president midterm year. So you got Biden coming in. His approval ratings are down. We've got rates ticking up. We've got tapering going on. We've got this lingering pandemic, and we got China. Us sort of flexing our muscles with China, them flexing it back. Russia's on the border with Ukraine. Iran is doing its usual messing around. So there's a bunch of things that can test a president and a country in a midterm year of a new president, as well as the valuations, the inflation picking up, which is part of that super boom forecast. Does anybody remember that forecast, Danny? Do you remember that, Marlon? Maybe I should show you that. Do I have that open? I think I do. So I did a book back in 2010 called Super Boom, Why the Dow Will Hit 38,820 by the year 2025. And it's based on a forecast that Yale made. You know what? I should pull up the slide deck of this. Hope I'm not jumping over too much for you guys. Let me see. Where's the super boom? There it is. Here, we'll throw up some PowerPoint slides for you. There's a question. Actually speaking to them, that's a technical thing. So here's a picture of the Super Boom book. It started with a forecast I made back in, and here's the big chart of the chart that Yale drew by hand. This is the secular bull and bear market cycle. We pretty much came out in May of 2010 and called when the Dow was about 10,007 or something, and forecasted 38,820 by the year 2025. We're on schedule for that. It's based upon war and peace and inflation. So the inflation ticking up here is not so negative for us because that's part of the super boom equation. You have the peacetime, you have inflation, and you've got what we call culturally enabling paradigm shifting technologies like indoor plumbing, the automobile, air travel, air conditioning, the combustion engine, the microprocessor, perhaps blockchain, vaccines, and those kinds of things, and energy technology, batteries that we're looking at. It could be part of this boom that we're in right now that's going on. So this is just the equation there. I just want to scroll through, giving you a couple of the things that we did. So here's what Yale did back in '77. based upon work that he had done throughout '76 when he uncovered this super boom. Here's his old chart with was done on one of those what do you call transparencies, drawn on that with a marker. And here's our you know beginning buy forecast in November. It was actually October 2002. A sort of a throwback to Yale's 1974 buy 18 times across the top, right at the Dow bottom. Here's our forecast from May 13th, 2010, calling for Dow 30 at 820 by 25. Stocks catch up with inflation, but first inflation catches up with government spending, which is what we're doing right now. With all the spending going on out there, put it in the Almanac, the 2011 Almanac, and then we did the book. We got some flack from people out there, but once you start looking at the prediction, it was only a 5.2 compounded annual growth rate over the long haul. So that's the Super Boom book, and it was a nice forward by Barry Ritholtz. A little comment from Dougie Cass down by Danny. He's probably in Palm Beach now, right? So I just wanted to give you a little look at that since I mentioned it, but we'll close the PowerPoint there for now in this particular file. So we did Santa Claus Rally, and fourth quarter, again, one of the things we're looking at, you guys wanted to hear about triple witching coming up. I'm going to show you the aura of the triple witch in a second. So here's the fourth quarter. We're in a post-election year, still the strongest quarter of the, we had a bunch of gains there of the 4 quarters of the post-election year. You can see that. All right. And best and worst 6 months, best and worst 8 months for NASDAQ. You can see some of my stuff on the side here. You're getting a little look at the how we set these things up, right? You can see that even despite some of these big worst 6 months gains, like right here and in 2017, we still have the Dow and S&P doing getting most of the performance in the best months of the year, November through April, versus the worst months, May through October, which kind of goes flat. I can show you some of that seasonal stuff too, but I think we want to focus on what's going on right now, and I'm going to get into some of the technical stuff here. Here's NASDAQ, 12.2% on average from the best 8 months, November through June. This is using MACD timing also, which we're getting out of there, as well as the worst months only up 5%. So I want to show you the triple witch. So I think it's on page, let's see, 76 here. Rally for all seasons. Hold on a sec. I'm just going to pull this page up because I think that's what's coming up for you guys, and it'll be, it's actually, all right. So fourth quarter, most bullish, down weeks trigger more week this week after. But what I want to get down to is here, the expiration week and the week after. And these are Dow point changes. You can see that December, right over here, triple witching, blows doors on the other expiration periods. You've got the Q2 and Q3, June and September being the worst, part of the worst 6 months. You can see this serious negative behavior here in June, triple witching. Again, last year, we had, COVID issues there, but that's the trade there. And then, in the Almanac, you can see it right here. You can see those edits there. Here's the triple witching. Triple witching week, up 28, last 37. There's your volatility in 2018 that you were asking about, Danny, right? And then triple witching day, up 26 and 39. That's Friday the 16th. Well, this year it's going to be the 17th. Sorry. This is the updated data on next year's calendar. And, that's the stuff we're looking at for year end. I can tell you that, we're looking for a potential move at S&P 5,000 before year end. I looks like we shook off Omicron for now. The taper tantrum seems to be over. So unless the proverbial stuff hits the fan, I think we can rally to new highs and take a little run at S&P 5,000. But next year is a different ball game, as you know I've been showing you with the worst months. I mean the midterm election year looking much worse than especially with a new Democratic president than all of the other options. Here's our market at a glance. I don't know if you guys see some of this stuff. We look at seasonals, fundamentals, technicals, monetary and government policy, geopolitics is all wrapped in that, and psychology, which had gotten pretty negative relatively to recent high numbers, which is a little bit of a move. And I want to show you what we're looking at stock trading wise. Yeah, I think it will be a lot different next year too, Danny. So let's see. Here's our portfolio of stock picks. We do a nice basket around our MACD buy signal in October. We had a MACD buy signal October 8th. I'll show you that in the chart in a second. Some of the small caps, we had a couple that we got rid of that just sort of ran away from us. You don't get them all. And I think we're going to be looking at a large cap. After this little dip here, we're going to look at we just did small and mid caps back in October. And I think with the sell-off, it opens up an opportunity for us to look into some large caps. So there's the stocks we're looking at. And again, if you want to kick the tires, you just go to here, I'll log out for a second. And then if you go to our homepage and you want to click on an alert, or you want to click on the portfolios, you just sign up for the free trial right here and fill it out. So logging back in to the portfolios. Here's our sector trades. We're still holding gold from July 19, which was the seasonal trade. These are mostly based on the seasonalities of sectors, the sector seasonalities, with our fundamental and technical analysis overlaid on that. Biotech's a new recommendation for us. I think it's still underneath that price, or it was recently. XLE, I own some of that myself. The year end, this is the oil sector, not the the commodity based ETFs. You can trade futures or options, anything there, but we like the ETFs, and this is where you see like the Exxons and Mobiles and stuff tend to make a low point around December. Yes, they've been up quite a bit, but with the demand out there and what's being pumped into the economy, I think there's still an opportunity. What do I think of Goldman Sachs call for crude 150? Goldman's got, they're probably trying to unload a position. They're probably trying to run it up so they can sell into their own. They're just talking their book, but it's not unreasonable. I don't have a price target for crude oil, but that's the reason why we went into the seasonal trade for the XLE, despite the run up in oil, because we think it's got upside to it. 150 is not crazy. Did I miss any of the questions back there? Why is gold lagging? Inflation. It's really not the best hedge against inflation. Stocks are. People like to go to gold when there's a big crisis out there, but gold's had a big run. I think also Bitcoin is taking a bit away from the I'm reading the question here. Crypto is the new gold. There you go. That's what I just said. Question: do you think the seasonality may still work in the coming years? Which seasonality may still work? I think there are many seasonalities that are still working, so I'm not sure which one. Gradually higher interest rates. I guess what you're saying is coming back to a more normal interest rate environment will turn seasonality back to normal a bit. Yeah, but it does change. Over the years, we've seen some shifts and things, which especially with the monthly stuff. Is there a question out there, Danny?
Well, Jeff, the thing that I was going to ask, obviously with the market down so much at the end of November and the beginning of December, there was a mammoth amount of liquidation and hedging and all that. But underneath that, you've got people trying to be long for year end. But
Yes.
where does most of the gain for the year end rally comes in the last
Last half.
In the Santa Claus rally in the last week, right?
No, not the Santa Claus rally per se, but the last half of the month. I mean,
Last half of the month. So
look,
we should
look at your. Did you get a 22 almanac yet, Danny? Do I got to send
no.
you one?
Yeah, you got to please. I
Let me
mean,
let me jot that down because I meant to.
So, I mean, if you're talking the middle of the month, we're still not there yet, but yet the markets have rallied. The S&P is up 3% since its lows. So,
I mean,
I guess
I think we can go higher. I think it's the last half of the month. We could get a big Santa Claus rally. This is a period of time, as I was showing you before in this this blog that I had here. The typical December.
right. And how like if you wanted to play the index markets, how would would you go? Which one outperforms the most, the Dow, the S&P, or the Nasdaq in the last?
Nasdaq and Russell are usually stronger
Yeah.
in general this time of year. I personally own the Qs and the IWMs as long as the XLE. So those I bought around the Qs and the IWM around our October 8th MACD trigger buy signal.
Yeah.
Which I was up a bit more, gave some back, but now it's looking pretty good. So Qs and Russells is what I'm looking at.
Yeah. Okay.
I mean, here's the October 8th crossover. We wait for confirmation across Dow, S&P, and Nasdaq. I don't have this on. This is yesterday's close. If I put it on live, I might drain too much from my hard drive here, so I'm just going to leave it. We're kind of flat today anyway, right?
We're down a little bit.
Yeah, it was a little red.
Yeah.
So here's the buy signal here on the S&P. So we look for confirmation across Dow, S&P, and Nasdaq.
Right.
So there's that buy signal right now. So we're up from there, but the chart that I pulled out, you guys know Helene Meisler, right?
Yes.
So she put a tweet. I was looking for doing some technical blog post, which I did yesterday, and she put out a tweet about this island reversal. So I just made sure I knew what it was all about. But you see this gap down. This is the Dow, and the Dow still matters. Sometimes more than others. NDX sometimes leads. But you had this gap sell off down. It finds support, or this trend line I drew here from the June lows through the September lows. We just kind of touched right off it there, right around the blue line's at 200-day, the pink line's at 50-day. So you got this, this is just sort of a support line I've drawn in there through a bunch of, different. You can see where I'm drawing that. You guys know about charts. Yep. You got this resistance support / right here at the August highs for the Dow. And we kind of broke right through that here. We gapped down. You get this island reversal, which is a bullish indicator because it's a bottom, and we broke back above it. But today we're struggling. We're going to need to hold this line. And the other thing I find supportive is this. Yesterday was a MACD buy crossover. Now MACD, is something you use to confirm other analyses. It's not just, in a vacuum. So we use it to confirm when you get into the in and out of the best and worst months. Here, it's kind of helping confirm this island reversal if it holds, But this is, a little technical look at the Dow. I've been running this technical look at the NDX, which is just, I mean, you guys can make fun of me, but I do. I
Well,
throw a lot of shit on here.
the pit bull
Helene would
says if
probably
you're
kill me. She's like,
yeah. Well, the pit bull always says just start drawing lines on the chart. Remember when he said that?
yeah. So, but
You've
if
been
I
drawing lines.
some of this is I keep it there for historic, like, what I was talking about months ago, so it's not necessarily what I'm looking at now, but it shows me what we had said was support and resistance. And we got,
Yeah,
W123 reversals and, dojis and stuff like that. So it's kind of just a record of what we were looking at. And to post this, it would be a little bit different. So I don't know. I think I kind of covered a bunch of stuff that I wanted to kind of give you a flavor of what we're doing. I know it was a little bit erratic, but I just wanted to run through a bunch of things and kind of have a chat about stuff. So,
yeah. No, you did great. You did great. So,
so
what do you got planned for the holidays?
well, considering we were in Hawaii for 16 days in August, and my other son went to Israel on a teen trip, we're gonna lay low, man.
Yeah, yeah.
There's a football game, a college bowl game that my buddy's kids' school is playing in. Virginia Tech is in the Pinstripe Bowl, and the boys are in wrestling season, man. They're gonna be going to practice and trying to maintain their weight. They're both trying to drop a weight class this week.
That's great. All
And
right. Well, listen.
I'm gonna try to drop a weight class too again.
Yeah. Well, I got to get on that also with you. But listen, I'll tell you what. I know you got a busy day out of yourself. I want to thank you for coming in. Does anybody have any questions that you'd like to give Jeff before he goes?
And
All
if
right. Well,
not, and
okay.
something comes up later, you just shoot me an email.
Yeah. Can you put your email in there?
I can. You can also ping me on Twitter, whatever. Whoops.
No, I think it was a great presentation, you guys. Look, there's no doubt about the seasonalities going into the end of December or after the middle of the month. And this is really kind of what I've been working with, kind of trying to stay long. I fell off that the last day or so, which was a travesty. I do have the mini options, but um, I think the S&P is going to go up sharply from here. I really do, and I don't think there's going to be much that can stop it. But anyways, thanks a lot, Jeff. I've got my closing for my house right now, so I got to jump off the phone. I'll talk to you guys.
All right. Good luck with that, buddy.
All right, I'll be in touch, Jeff.
All right. All good.
Later.
Happy
Good night.
holidays, everybody. Thanks, Marlon. Thank you, everybody. Let's do this again. Maybe more often. All right. Peace out.